Sean Binkley joins us once again. Sean, of course, mortgage broker and life insurance and wealth advisor. Good morning, Sean.
Good morning.
Today we're talking about some unique properties because there are some non-traditional homes out there that people are drawn to, but there are some things to be aware of when you want to finance a unique property.
Yeah, exactly. There's always something that I guess is romantic, I suppose, about buying and refurbishing, whether it's an old church or an old store, and moving into it, right? I think that'd be kind of cool to live in such a place.
Yep.
But the issue becomes financing that. I mean, if you got cash to buy it, then we don't need to talk about it any further, right?
Right,
Buy what you
right.
want. But a mortgage lender is always concerned about worst case scenario when they lend you the money. And the worst case scenario is that you don't pay them back. So when that happens, they have to look at the marketability of a property.
Okay.
So something that's unique, such as a renovated church, perhaps properties with unique construction.
Yep. The image we show is one made of straw, the straw bale idea.
Yeah, so the straw bale house is not what people think of with the three little pigs.
No.
I mean, it's an amazing construction that is, you know, it's from the earth. It's great as far as our value is concerned. There's a lot of benefits to it, but there's not a lot of lenders that are going to finance it. More today than there were yesterday, of course. Things like off-the-grid homes that are fully powered by solar, and also anything with commercial zoning. So, you know, when we get into something with a store, especially in rural areas, you know, unfortunately, there's a lot of business areas in rural areas or small towns that there's no longer businesses there, so people are converting them to residential units, and just because of the zoning or the uniqueness of that home, talk to your mortgage broker about the possibility of getting financing for that, because even if you were to put some money into it yourself, you want to make sure that you're going to get that money back out. And also the important part of it, not only as far as financing, but you know, things change. You may think you're going to be in this house for the next 20 years, but talk to your realtor about the marketability of it. Don't expect that you're going to sell that house in 30 days like your neighbor.
Right.
It may take a year or two possibly to sell the home if it's unique.
Because it really does take a certain type of buyer who would be interested in perhaps a renovated church, a renovated store, something that is off the grid and a little remote, or even something else that we hear more about, people living in the old containers, shipping containers.
Yep. Shipping containers. I've looked at that myself. That is so neat what you can do with these things. But yeah, it's not for everybody. For every lender it's not for, and it's not for everybody for marketability. So again, the most important thing that a lender is going to look at is how do they recoup their loss if you move and don't pay them. And they have to look at you know, it's not just their balance, because it does take time to sell it in order to possibly evict someone from a home if they're not paying their mortgage. If they have to carry that property throughout the winter, it has to be winterized, utilities have to be paid, property taxes have to be paid, you have to pay someone to come and maintain the home. There's a lot of costs that add up with that, and of course legal fees. Okay.
So good advice on financing a unique property. I want to touch base with you on the big news, the real estate news last week, the move by the Ontario government to try and curb Toronto's red-hot housing market. How is it going to impact the Kingston real estate market?
Yeah, I think from a mortgage perspective, we can get into some more details later on about that, but I don't think it's going to affect us at all, really. We don't have a lot of foreign buyers that are speculating the market here in Kingston. We're seeing a little bit of it, but we're not seeing what they see in Toronto, because it's not, if you're an investor, you're probably going to a much larger center. So if it was Toronto, maybe now it's London, or maybe it's Ottawa. I don't know that we're going to see that come to Kingston anytime soon. I could be completely wrong with that. The biggest change really for people in Ontario would be rent controls. So that's going to affect landlords, and it will affect tenants as well. But really it only has to do with any units that were built after 1991. Okay. Every other unit has rent controls. The maximum rent increase, unless there's extenuating circumstances this year, is 1.5%. Landlords can still apply if they do major renovations, if their utility bills have gone up or taxes have gone up above that amount, for a special increase. But there were no rent controls for newer units that were built after 1991, if we can call that even newer units now.
All right.
It was a free-for-all.
All right. Got to leave it there, Sean.
Thank
Thanks
you.
again. We'll see you next week.
This Dominion Lending segment has been brought to you by Sean Binkley, broker and wealth and insurance planner.